Yeah, so this session, we're looking at how to create more opportunities for infrastructure investors in the UK and helping us turn words into action regarding net zero. So as you heard, I'm John Phillips. I'm the Chief Exec of the Global Infrastructure Investor Association. We represent around 75 of the leading international investors in infrastructure around the world. Between them, they currently hold about 1.6 trillion assets under management. That's about 2,600 individual assets across 70 different countries. Now, about 30% of those assets are actually here in the UK. So they range from ports, airports, rail and rolling stock, renewable energy, utilities, digital infrastructure, social infrastructure. That's student accommodation, hospital beds, things like that. So it's a pretty broad range. When we talk about infrastructure, it's a very broad category. But obviously, virtually all of those sectors have a net zero play in them at some point or other. They're either actually actively helping to reduce carbon emissions, or they have a problem that they need to address going forward in order to reduce their emissions. So one way or another, net zero looms very large in the infrastructure conversations. So I've got a great panel to introduce to you, but I'm going to get them to do the hard work and introduce themselves. And just very briefly, guys, who you are, the company you represent, and just a quick flavour for the kind of holdings that you have in a UK context. So let's start with you, Steve.
Great, thanks, John, and good to see so many people here. My name is Stephen Pugh. I'm a partner in the infrastructure team of Federated Hermes. We're a UK-focused investment manager with around 3 billion sterling of assets under management. We cover a variety of sectors within infrastructure. We're sector agnostic. So we've got investments in regulated utilities, transport, energy from waste, that type of thing. We were also a relatively early investor into renewable energy generation through onshore wind farms and rooftop solar. And I guess to continue the UK theme, you know, our key investor base is largely made up of UK corporate and local authority pension schemes.
Afternoon, everyone. My name is Ian Brown. I run the banking and investments team at UKIB. That's a group of about 50 people nowadays, all doing infrastructure transactions. We are an arm's length body of the Treasury, so they're our shareholder, but we're independent of them and of government more generally, so we decide what deals we want to do, and we have our own approval processes. We've been formed really with two things in mind. One is investing in infrastructure to get this country closer to net zero, and the other is, again, investing in infrastructure to help with levelling up. We focus on 5 main sectors: clean energy, digital, water, waste and transport. We've got £22 billion of capital to deploy. And probably most important for this conference, we're not seeking to compete with anybody in this room. We're here to fix problems. So if you've got a financing gap, if we need to accelerate financing in a sector more generally, if you've got some sort of first of a kind or nascent technology, then we can help with that. And that's what we do.
Thanks. Good afternoon, everyone. My name is Priya Viruppan. I'm a managing director at InfraCapital. InfraCapital are a European infrastructure investor. We invest in the mid-market across 2 main strategies: greenfield and brownfield. So brownfield being sort of more operational sort of infrastructure, and greenfield being new assets that require a huge amount of capex. And that's why it's sort of relevant to be here today, because this is obviously a sector that requires a lot of capital investment into it. And if you remember the graph from the previous presentation, which was very informative, the funds that I represent are sort of looking at coming out of that valley of death and how can we invest into that sort of trajectory. And to give you a sense for how focused we are on that space, 2 of our investee companies are well represented in this room today. So Zenobē Energy, Nicholas will talk about, he's at the end of the panel, and GridServe, Mark's in the room today. So we are laser focused on this energy transition space as an infrastructure manager.
Good afternoon, Greg McClymont from IFM Investors, which is a very large pension fund owned infrastructure manager. owned by Australian pension funds, but also investing across the world on behalf of UK pension funds and pension funds from North America and elsewhere. Like Priya, but even perhaps more so, traditionally, at being pension fund owned, we sit very much at the core infrastructure end of the spectrum. So in the UK, we own airports, regulated utilities, and those types of assets. Moving forward, we've started to add to our portfolio, of course, renewables and decarbonising, which I think we'll come on to talk about in more detail, John.
My name is Nicholas Beattie. I'm one of the 3 founders of a company called Zenobia. As Priya says, Infracapital are one of our investors in that business. We started the business in 2017, initially with £25 million of private capital that we sourced from friends and family. And now we've raised around about 370 million, and we're currently in a capital raise to raise a further 350 million pounds of equity. In addition, we've raised about £1 billion of debt through a number of different processes. So it just gives you an idea of the flavour of the amount of capital that we need to continue to operate our business. We really focus on 2 main activities, which are really emerging activities in the infrastructure space. The first of which is very large batteries connected to the grid to provide the stability for the ESO, so that the lights effectively don't go out as more and more power from renewable generation comes onto the system. And the second area is our focus on batteries has led us into supporting the electrification of fleets, and that's been firstly in the bus sector, which has been the first area where there's been an opportunity to work with very large commercial vehicles that have 300 or 400 kilowatt-hour batteries, and we do all the design work and the installation and funding for the electrification of the depots, and we also now finance the batteries on the buses and the buses themselves. And we've got over 1,000 buses here and in Australia and New Zealand, as well as some now in Europe that we support. So we're the leaders in that market, having started here in the UK.
Thanks, Nicholas. Thanks, panel. Okay, so you know who's in front of you and what their interests are. So let's kind of get into a bit of a meat of the conversation. We at GIIA, we survey our members every 6 months just to kind of keep track of sentiment in the different markets and see, what our members are thinking about the investment opportunity around the world. And I have to tell you that the UK is not currently tracking very well. And I don't mean to bring a downer on today's proceedings, but that's the reality. Compared to sentiment towards the US, Canada, and large parts of Northern Europe, UK is lagging at the moment. Now, there's a variety of reasons for that, which we don't probably need to rehearse in detail this afternoon. But I guess, that's what the survey's told us, Steve. Can I come to you first? I mean, how do you see the UK's prospects at the moment? When you look at the range of opportunities that Hermes can choose from in terms of where to deploy its capital, what are the issues facing you from a UK point of view?
Yeah, I think it's interesting from a UK perspective to put a more positive spin on it. One of the areas the UK is leading on is understanding the need to deliver net zero. I think that's a really important thing to acknowledge. And we can sort of lead the world in helping to do that. One of the frustrations I suspect people are feeling around trying to get that investment to work in the UK is just around the visibility over pipeline, the clarity over what the structures are going to look like. Because to come back to the previous speaker, why do we sit on the right-hand side of that spectrum and being lower cost of capital investors? It's because we need an element of downside protection. So we can't invest in things that have binary risks to them, for example, whether that may be around development and planning, or whether that's around the future commercial need for products. We need long-term visibility, and we need scale. So we need guidance from government to a certain extent, potentially funding in some areas, but certainly guidance around how the market's going to develop, how they want it to develop, and give us that clarity of vision. And I think a couple of years ago it was probably easier in some ways, but recently we've got cost of living crisis, increased debt costs. So things are going to get more expensive, and I think what that means is we really need to be laser focused in terms of where are we spending our money, where are we getting best value, and where are we delivering the biggest sort of bang for the buck, both in terms of our ultimate clients, but also UK PLC.
Priya, let me come to you. What's your view?
Sure, of course. So I guess when we are looking at investing, what are the things that we're most focused on? Similar to Stephen to some degree, but what I do is more focus on deployment. So what do we need is certainty of ability to deliver pipelines. So can you actually put infrastructure in the ground? Are there physical or practical constraints to that? What will the cash flow certainty look like once you've done that? What is the macro environment surrounding it? So I guess taking those things in turn, the UK does face some constraints around things like planning, things like grid, that do slow deployment down, and it is not particularly helpful from an investor point of view. But having said that, there are some market-driven forces that actually make it more attractive than some other countries. For example, EV readiness in the UK is very high relative to some other European countries. The sort of framework around revenue stacks for battery assets, as I'm sure Nicholas will talk about, is actually more evolved than in some of the Northern European countries. But the general macro and political environment has not been especially helpful in the last few years. The sort of supply of labour that is actually required to put infrastructure in the ground has been impacted by Brexit. The sort of political uncertainty around leadership is unhelpful for global investors when they're looking to choose where to deploy their capital. So I'd say it was not all doom and gloom for the UK, definitely. I think we don't see any dearth of opportunity, but we do see the need, as Stephen said, for more government sort of certainty on direction of travel and facilitating some of those sort of aspects.
Greg, any additional points to build on that?
Yeah, thanks, John. I suppose on the positive side, the UK starts right now in quite a reasonable position, having decarbonised its grid through the phase out of coal and the success of offshore wind. So looking backwards, the UK finds itself in quite a reasonable position. I would echo Priya on the supply side challenges relative to other jurisdictions. Anxieties about skill shortages and labour shortages, I think, are relatively larger in the UK. And then I think sentiment generally has been affected by the US Inflation Reduction Act, which is much talked about, which is really the US putting the full financial firepower of the world's largest economy behind energy transition for the first time. So that, relatively speaking, is a challenge to other nations and other jurisdictions. But I mean, I think the UK objectively is in a place to get things right, but it really has to start getting things moving forward quickly. The UK Infrastructure Bank is a really important institution in that context. Translating government plans into actual financeable projects involving the private sector is going to be obviously critical.
What a perfect segue to my next question. So, Ian, thank you. This is your chance to enlighten the audience as to the role of the UKIB and how you intend to make a difference on in this space.
Yeah, very happily, and thank you for the introduction. So I mentioned in the introduction we've got £22 billion of firepower from the government to do what we need to do in the key sectors that we're focusing on. We're agnostic between debt, equity, and guarantees. So bear that in mind, that we can be very flexible across the capital structure. The key thing that we're trying to do is crowd in private capital. You hear the numbers around that are required to get this country, let alone other countries, to net zero. They're absolutely huge. There's no way the government can do it on its own. But we're here to try and crowd in other investors to make it a little bit more realistic. And the ways we're doing that, as a policy bank, in between government and the markets, there's probably four things to talk about. One is, and this is probably our most important plank, if you like, is just our risk appetite. We can, and I think we should, be taking more risk than most of the other people on this panel. And we can do that in a number of ways. To try to give you an example, if we were to put a first loss piece into a structure, or if we were to provide a guarantee, we can take on some of the risk that other investors won't want to be taking on. So if there's too much merchant risk, if the tenor's too long, if the technology is just a little bit too new for people to be really comfortable with, then we can come in with something like a first loss structure. We can take away some of that. We'll take on that risk from you. It doesn't mean we're taking away all the risk, and we're not in the business of giving 100% guarantees for nothing. But we can mitigate some of the risk and then make it more feasible, I think, for other investors. Other areas we can work. I'm often asked if we can do cheap money, so concessional finance. The answer is we can, but we will use it very, very selectively. And the money that we've got to deploy is taxpayer money. So we're not going to go and use it where we can reasonably earn a commercial return, or certainly where other private capital will come in. But we can use discounted rates if it's the way to get a transaction to work, and we can also push tenors out if that's what's required to work. And then two other small thoughts. One is, as I say, we're very flexible on capital structure, which most investors do either equity or debt. We can do both, and we can do the guarantees. So hopefully that is helpful. And then sometimes just having us in the deal. We've seen that's made a real difference. I'm not sure whether it's just credit committees take comfort from the fact that UKIB is there, or whether we're really, I'm hoping that we're adding something. But we've definitely seen that as helpful in some transactions. And if we can come in as a cornerstone to really anchor a deal and just give other people confidence, then we're very happy to do that.
Thank you, Ian. So, Nicholas, turning to you, you've launched a hugely successful international battery storage and bus electrification offering in the UK from a UK base. Importantly, how have you managed to achieve this, and what's the experience been of the UK's net zero investment landscape from your point of view?
Yeah. So, I mean, I think, as I mentioned earlier, interestingly, we started the business with our own private capital to access to people that we pulled together a relatively large sum in order to be able to start the business. But once we'd actually proven that we had a business model that was working, we were able to initially get capital from Tiger Infrastructure in the States, the early stage capital investor. And then from JERA, which is jointly owned by Chubu and TEPCO, the two largest generators in Japan. And coming back on your earlier comments about the UK not being such an interesting place to come and invest in, what we're interested in is to see that major companies like JERA and the companies that they represented were interested in investing in us, because clearly the whole environment about investing in net zero here in the UK is much more advanced relative to countries like Japan and elsewhere. And what they wanted to do was not so much deploy £25 million and get a return on it, but deploy £25 million and understand what it meant to get involved in large-scale batteries, is where we'd started the business, so that they could take that technology and take it back to Japan as Japan begins to go down the same route. So I think we have to pat ourselves in the UK on the back for that. What I would say is that we've gained a lot from it because they're a strategic investor. We've been able to use high voltage engineers that have come over and been seconded to us, and that's helped us grow with the capital that Priya and her team have produced. So that's one good example. The second thing is more generally is getting into the electrification of the bus depots and around that area. Again, the bus industry had been very much deregulated, as we all know, and the operators were looking to be able to electrify and take those moves as quickly as possible. So again, that very much suited the approach that we had, and we were able to solve a lot of issues, particularly around the costs associated with upgrading DNOs, transformers and so on into the depots. So again, the market was very open to suggestions and ideas that take people through. And then the final point I'd say is on the financing, and we'll talk about people perhaps later, but on the financing side, we've really been able to benefit from a lot of the technology that's available in the City of London. NatWest has supported us in two major financings more recently, one of which was the financing for the fleet vehicles. So that was sort of around £200+ million. And that is the first time a private placement has been done in the world to support fleet financings of fleet vehicles. And that's not yet been done anywhere else. And equally, we've done another syndicated group of banks and institutions that come together to put in the last tranche of about £650 million, including an accordion, to support the build out of these big batteries that we're doing. And so without that expertise and knowledge here in the UK, we would have had to go elsewhere to bring all that together. And it really is here on our doorstep. And that really makes a difference for us with the sort of business that we have and the ambitions that we have as a company.
Well, that's a great success story. Great to hear. I'm just going to scan the room and just see if there is anybody that is sitting on a question that they'd like to put to anyone on the panel. In the absence of Slido, I much prefer a show of hands or a shout. Have we got a question? Please. Can you shout up?
Infrastructure projects or projects where you need that capital that is not venture, that is more potentially lower returns. What is one ticket?
Is my mic on? My mic on?
Sorry, thank you. What would be the earliest stage or the smallest ticket you will write as part of your investment thesis?
Okay, sorry, I was just trying to make sure the mic is on. So the question was how small will we go and how early stage will we go? Typically, we're trying to hold the line at about £25 million, whether that's debt or equity, simply because the numbers below that, it just starts to be difficult to deploy £22 billion effectively if we're using very small numbers. That said, you might have seen that we did our first natural capital transaction earlier on this month, which was only £12 million. And so we made an exception there because it was the first time in that sector, because actually in that sector that was quite a big transaction. There aren't many happening. So think of 25, but if you're at 24 and a half or 24, then let's have a conversation. How early will we go? It'll depend what it is, and if it's early enough, we might look at equity rather than debt. But you know, typically we are trying to help accelerate the financing of emerging technologies. You know, we're not really looking at mature technologies because there's plenty of capital around for those. So if it's fairly nascent, we can help there. We do some financings which are first of a kind, and we'll do those on our own. We've got a couple of those in the pipeline. So if it's helpful to have a chat after this, I'm very happy to do that.
Thanks. So back to the investors on the panel. Starting with you, Greg. Can you sort of share a few examples of what decarbonisation or renewables has looked like within your portfolio over recent years? What are the kind of challenges that you've sought to overcome?
Yeah, thanks, John. As I mentioned at the outset, IFM, being pension fund owned, very much sits in the core infrastructure space historically. So I think a good example is airports and aviation. So at Manchester Airport, which we are co-owner with the Manchester local authorities, there's an agreement in place with a developer to produce the first direct supply of sustainable aviation fuels into a UK airport. I think that's quite a good example, not least because that's in place and is underway as a project. But of course, the financial environment for delivering sustainable aviation fuels as a commercial proposition still has some way to go, and will depend on really the government in the end structuring the market, who pays for what, putting it simply. So that's one example. Another, more broadly, but in the same space, with these large infrastructure assets, they have to be transitioned since they're essential infrastructure. So we begin by looking at what's known in the jargon as behind the meter. So how can we decarbonise their supply? Airports would be one. But in Australia, where we were founded and headquartered, we've partnered with other major infrastructure investors to agree a power purchase agreement with the Australian grid to essentially supply think it's 400 gigawatts of renewable energy over the next 4 or 5 years. I think it's 5 years. And because of the scale of that, there's different investors in the grid. The only way to really make it effective was for the different owners to come together and actually agree with to agree on that plan to decarbonise the grid. So we tend to focus in that sort of area. We also increasingly in the renewable space, batteries, for example, in Europe. But I'd say from a pension fund-owned investor at one end of the risk spectrum, finding a way to decarbonise these essential infrastructure assets has been the focus.
Thanks, Greg. Priya?
Sorry, can you hear me? Yeah. I guess you've talked a bit about how your portfolio companies themselves decarbonise. I'll probably give you some examples of where we have invested in companies that are themselves contributing to the energy transition. So Infracapital invested 3 years ago in a company called Inland Terminal Groups, which is based in the Netherlands and Belgium. They operate ports and have done inland ports for many years, which provide barging services from the main ports of Amsterdam and Rotterdam inland, what this does is displace about 100 lorries per barge that is used to transport goods inland, which is a 75% CO2 reduction on what would otherwise be the case. So we've invested heavily in this business to grow that capacity. And we're also investing in electrifying the barges themselves, so to further reduce the carbon footprint of those services. So you have companies like Nike, for example, who are based in Antwerp and do their European distribution from Antwerp. All their EMEA supply comes into Rotterdam and is transported up by barge to Antwerp and then distributed. So, you can imagine if you extrapolate that across your Budweisers and your et cetera, that is a huge reduction in Scope 3 emissions for those clients. So as one example, I guess a little bit more of a direct example of reducing carbon emissions is investments that Infracapital have made in Recharge, who are the leading charge point operator in the Nordics, and in GridServe, who are one of the leading charge point operators in the UK. That is a reduction of hundreds of millions of miles travelled that are now not producing emissions. So we made an investment. We own 100% of the Recharge business in the Nordics and have invested over £200 million. And similarly with GridServe, we've made an investment of about £200 million into that business as well. I won't talk about Zenobē because Nicholas is going to cover, but that is clearly a very good example of the theme of investing that we're looking to do. I'll stop there.
Steve?
Yeah, I think for Hermes, sustainability has always been an important part of our investment thesis, even sort of dating back a decade or so. But when you're investing in an infrastructure as an asset class, it's quite a broad church, I think, as John mentioned at the start. So, like I said earlier, we were early into onshore wind and solar, so sort of naturally sustainable generation. But we also have much heavier emitters within the portfolio, and a mix all across the two. So, our focus on some of the heavier emitting businesses has been how do we reduce the carbon. We're investing in Cadent Gas, who are exploring the potential for hydrogen. They're also placing a greater emphasis on methane leakage and reduction of that. But also across our transport assets, I think, again, as Greg said, that's an area where I think we can make a real difference. We're invested in a ferry business between Denmark and Germany called Scandlines, for example. They've now moved to having a fully hybrid fleet, which combines traditional diesel engines, but also with batteries to try and reduce the amount of fuel that they consume and to try to make things more efficient. We've also got an investment in Associated British Ports, who published a great sustainability strategy last year, and great to see one of the chief architects of that here today. They've done some great work in the past. This sort of brings it all together, but some of the things that they've looked at historically have been self-generation to help, power the estates with renewable generation, but also to help actually the customers with their decarbonisation journey. So things like the Shore Power Initiative, which provided renewable generation to cruise ships whilst they're in dock to stop them effectively having to burn marine fuel whilst they're sort of sat inside a city centre, which I think was a great initiative.
Thanks, Steve. Ian.
Thanks. So, as I said earlier on, we've been around about 2 years now, so we haven't done that many transactions yet. I think we're now at signed or announced 17 in total. But those are across a whole range of sectors and a whole range of products. So we've seeded a number of equity funds, either in battery storage or in solar to move that away from subsidised. We've done a general clean energy fund with Octopus. And we've done a number of debt transactions, and it's everything from interconnectors to reservoirs. We signed a battery storage deal last week. I mentioned the natural capital transaction. So lots and lots of sectors. And if I think about what's in the pipeline, we're looking at hydrogen production, transport, and storage. We're looking at zero-emission buses of various sorts. We're working on a couple of very big water projects. We're trying to help ports with their enabling infrastructure for offshore wind, a whole range of things. So shamelessly advertising, if there's anything you need to talk to us about, then please do come and talk to me. Thank you.
It's all that. It's great to hear of so many great examples of investments that are actually taking place, right, and or on the cusp of taking place. Nicholas, any remarks to add?
Yeah. I mean, obviously our business is very much focused on reducing carbon emissions, and just one statistic is the £750 million that we're investing in batteries in Scotland will remove all the cars in Edinburgh and Glasgow for a 15-year period or something like that, and represents about 1.5% of the UK's carbon emissions. So that just gives you an idea of how you can do a finite number of projects and there's a really material needle-moving result. But the one thing I would also say is that from the perspective of the amounts of capital that's really required in this sector, I think the more that government can understand that, whether that be through the UKIB or whether that be particularly through doing green financings, which are perhaps supported more through looking at the capital structures of the banks so that you can get a better reduction in the cost of debt capital as you raise it through these structures. And we have done one structure and you get about, I think we got about 5 basis points off through that process. The more capital will actually then be deployed. And I think this is going to become increasingly important as we've seen a considerable change in the cost of debt capital since a year ago. So we all know what's been happening with interest rates, reflecting very much the disruption at the government level as much as anything else. And that needs to settle back down. But equally, during this period, we'd like to see further support from government through encouraging real proper companies that really do have green products that can meet the taxonomy requirements going to market and being able to get a benefit from those debt raises.
Thank you. Great, we've got a question. We've got 2 questions, 3 questions. Okay.
The first question is, who is to blame? And the second question is, how do we get back to the game?
Batteries. It's the UK government's been.
It's the boat in terms of supporting the battery industry.
Shall I repeat that question?
Yes, please.
Yeah, it's been reported that the UK government has missed the window of opportunity for building our battery. That's why there's been a backlash from Ford, from other car companies. So first, who is to blame? And secondly, how do we get back to the game?
Great questions, but I haven't got a clue what the answer is.
You would ask me. I can give you this is more of a personal view. I don't think there's any point being in the blame game, because I think blame wastes effort and time. I don't think we're out of it. The fact is, if you look across the Western part of the world, you know, we're behind what the Chinese have done. The Chinese produce between 65 and 70% of the batteries, the Koreans after that. So we're all playing catch up in the battery space. But I think there's plenty of opportunities to build gigafactories here in Europe and in the UK. It just requires the right technology and the right support from gentlemen like this and the right business plans.
Hiya. So I was wondering, to what degree does maybe district heat investments feature in your portfolios, and what kind of metrics would you look for, or how does that, what will you look for those kind of investments? Thank you.
Happy to start. I mean, I think certainly for us, district heating doesn't feature heavily in the portfolio at the moment, but it is an area of focus. I think the UK is a little bit behind continental Europe in deploying district heating, but in order to overcome the net zero challenges we face, it will be an important part of the solution for that. I think in terms of what metrics are we looking for, it comes back to what Priya was talking about in terms of the long-term sustainable cash flows. That's the most important thing for us, is having longer-term contracts in place, understanding what that revenue stack is, and having certainty over that sort of boundary of likely returns. We're not in the business of taking risks of failure, but equally we don't need outside returns. What we need is certainty over that band. So that probably is a fairly loose way of answering it, but I don't know whether...
Do you have a district heating project for us to look at? I think I'd echo that district heating is an attractive sector for an infrastructure community, generally speaking, but obviously you have to find the right project with the right contracts around it to make it viable and with the right length of certainty. Typically, in some European countries, actually, that does exist, and it has attracted a much lower cost of capital. In Sweden, for example, I mean, Infracapital has owned district heating networks that it's subsequently sold. In the UK, those opportunities don't appear to be presenting themselves at the moment, but I think, generally speaking, an infrastructure investor would be very interested in that space.
Yeah, at UKIB, we've got probably 3 or 4 heat network projects in the pipeline. Some of them independent. I think the majority backed by local authorities, and we're doing a lot of work with local authorities to help make these work. So you're right, they're a bit overdue, but we're working on them. And if it helps to have a conversation, again, shamelessly advertising, I'm happy to have a chat.
Anything to add, Greg? Don't have to.
I'm fine.
Just one aspect of the role of the infrastructure bank, Ian, that we haven't brought out yet is your role in working with local authorities and how that advisory role might help to unlock more investment opportunities. I wondered if you want to just maybe expand on that just briefly.
Yeah, very happily. As you can imagine, with a lot of local, we've had practically every local authority. They don't do a large-scale infrastructure transaction every week or every month or probably even every year. And so, 2 issues. They don't have the expertise in-house because it wouldn't make sense to keep the people there. And then they run on very tight budgets, so they don't necessarily have the spare resources to be able to employ people or to commission consultants. So what we're trying to do is provide that expertise and resource for them. We've got a couple of pilot projects on at the moment. One of them actually looking at heat networks down in Bristol. A couple of others looking at mass transit elsewhere in Yorkshire and over in Leeds and in Manchester. So we're really trying to help them out with just how they think about these projects. And we could also fund them as well, but the question was about advisory, so we're very active there.
And now, further question.
Hi, this is Piyush from Just Climate. So 2 questions, one for Priya and Stephen. Is there a timeline you've set for your existing portfolio to actually decarbonize or to transition? Because Steve mentioned a few initiatives, but are you setting a timeline given the urgency around the 1.5 degrees? And the second one for Ian. Ian, thanks for all the advertising, but is there a timeline for that 22 billion or this amount? Is there a rush? And are we long-term capital? Is it a 10 to 15-year timeline? I mean, how long can our capital stay with the portfolio companies?
Can I go first? I think in answer to the question about how we set a timeline for our portfolio, the answer is yes and no. So as I mentioned, we've got quite a lot of different assets within the portfolio. Some can decarbonize relatively quickly, others it will take far longer. What we are pushing companies to do, and what I think almost all of them have done by now, is they need a plan. So saying we'll decarbonise at some point in the future is not good enough. What we need is a credible plan that actually ticks the boxes and people can measure them against to make sure they deliver. So different companies will have different trajectories, but they need a plan, and it needs to be ideally sort of aligned to the sort of the net zero goals that have been published in the sort of 1.5 degree warming targets. So that's our aim.
Our stated objective is to have all AUM net zero by 2050. That may not sound especially ambitious, but as Stephen says, infrastructure is a construction-heavy industry, so it will take some time for that to take place. But plans are certainly being put in place to try and achieve that.
Thank you.
And as for our money, our planning assumes that we will deploy that over a 5-year period. If I could do it more quickly, I'd be delighted, because to your point, this is a really urgent issue that we need to be addressing, so very happy to do that. And then on maturity, we're not a conventional bank, so I don't need to worry about reg capital, so effectively I can go much longer than most other people. I think the longest we've looked at so far is about 20 odd years. We can go beyond that if the project needs it.
And can we recycle some of this 22 billion when it comes in?
That is a good question. I don't know yet, but I'm hoping the answer is yes.
Fair. Thank you. Thank you.
Can you pass the mic along? Thanks. So we're getting close to the end of our slot. So if we can just try and keep questions and answers as quickly as possible, that would be great.
Yeah, hi. On the other side of the carbon picture, we're talking about reduction and capturing. Any strong interest in that side of the infrastructure projects?
Yeah, I think we would say at IFM that the UK cluster approach is a very positive potential way of approaching CCUS, for example. And also, of course, the UK has the expertise in the oil and gas industry, which provides that, transferable skills, one would hope. I think the challenge there, and it brings, this is the case, of course, for a lot of things, the strategy looks credible, but then, of course, the decisions have to be made about who does what and what the financing position is. And we've seen that in CCUS. That's still the devil's in the detail as always, and the same in hydrogen as well, really. So I think if we looked across Europe, we would say that the UK clusters approach is a plausible one. But I think there's a danger, it goes back to the sentiment point at the beginning from John. There's a sense over the last year or so that the UK's not been able to push on and move from the drawing board to actually agreed financing models. So I think that's where the crunch point is going to come, but definitely very interested.
Thanks, guys.
Great. I want to pick up on this interface with government strategy, policies and plans, because, and I'm so pleased you mentioned the clusters issue. I mean, my question's a bit of a proposition in the sense we're only going to get where we need to get to, using my favorite sort of phrase, speed and scale, if we've got industrial strategy at a government level. And I mean, you talk about all of your individual investments, but presumably they're not all random. They're all part of a bigger strategy that is set to some degree by government, and we're seeing a manifestation of that in net zero clusters. It's not just the UK, because we've got them in Houston, LA, Rotterdam, Singapore, Shanghai. Actually, this idea of net zero industry clusters is emerging around the world. So I guess how important is that in terms of sharing the risk and costs of infrastructure you have to finance, and how critical are those sort of national and regional government strategies to the way in which you invest in individual infrastructure projects?
Anybody want to take that one on?
I don't mind starting just by saying risk allocation is clearly key, and the less proven the technology and the less obvious the market, to state the obvious, then the more persuading investors need to go into that space. And that's where, clearly, to go back to the financing, those models become absolutely critical. And you can see with the UK Infrastructure Bank, it's really making strides in delivering projects. May not be thanked for this. There's a need for a coordinating body for the larger projects as well. we're the kind of investor that in the equity side, we would start at kind of 150 million, maybe 200 million. So those big net zero projects that will be necessary to deliver the UK's targets, take the classic household retrofitting. How do you get households and offices to retrofit to decarbonise heat? That's going to take lots of government intervention to create a market and then a financing model which private investors can get behind. And that's a big jump for something like the UKIB. And there's a danger of, you take something that's working well and then you make it do something that's different. But there is a need for something to coordinate in a cohesive way at the national level, these kind of things. There's lots of cooks at the moment, isn't there?
And maybe if I can add on that, I completely agree around the coordination point. It's absolutely critical that we're joined up on this. And partly because as infrastructure investors, as Greg said, we need scale. So government has an obligation, I think, to support the earlier stage of some of these technologies to help them get to a scale where actually as infrastructure we can take over and deploy a lower cost of capital. It can't pick and choose different points of the value chain unless it has a clear idea of the whole lot. Because I think that's going to be critical over the next 5 to 10 years.
I think the other thing that infrastructure investors need, in addition to scale, is longevity. If you think about the source of the capital, ultimately, all of us are responsible for managing sort of pension fund capital or insurance fund capital, which is invested over 20, 30, 40 years. So if we don't have the confidence that a particular technology or sector is going to be supported or be strategically important for that amount of time, then it's difficult to make that investment case.
Can I just say on the on the coordination side, I'm not putting my hand up for that, but I probably wouldn't disagree that it's required. I mean, the work we're doing is trying to help on some of the concerns you've raised, particularly where you think there's too much risk in a project. We're trying to take some of that risk out. But I would also, maybe this is a bit spiky, but I do wonder if some of the institutional investors need to be prepared to take a bit more risk as well. There's an awful lot of dry powder out there. And the whole net zero project, it's getting urgent, and the numbers are absolutely staggering of what's required. So sitting there with, $500 billion of dry powder just seems a bit silly when we look at what needs to be done. So I'll just put it back. Should we find a way for people to take a little bit more risk as well?
It's a fair challenge, but when there are other markets like the US and others doing what they're doing, right? You can see where the investors, where the lion's share of that dry powder is going to go. But anyway, sadly, we've run out of time. Just as we were getting warmed up to some more exciting exchanges. But anyway, listen, I hope that you found that a helpful and interesting exchange of thoughts, and that you have an improved understanding of the world of infrastructure investment. And that helps you on your way, wherever that may be. Thanks very much.